Hello traders, you are welcome back to the Forex Geek channel, and in this video I'm just going to be showing you a very profitable day trading strategy using the Heikin Ashi candles, the Parabolic SAR, and the Exponential Moving Average. Okay, so basically this is a complete setup that helps filter out market noise, confirm trend direction, and pinpoint precise entry and exit points. We are going to go step by step so you can apply it to your own trading right away. First of all, we are just going to be setting up the chart. You have to add the Heikin Ashi candle to the chart, okay? Okay, let's look for the Heikin Ashi. If you do not have the Heikin Ashi under your indicator section, you might have to go and download it as a custom indicator, but that is if you are using the MT5 platform. Okay, if you are using TradingView, Heikin Ashi should be readily available there. You can just search for it in the indicators bar. All right, so this is our Heikin Ashi candle, and then the next thing we are going to do is to be adding the Parabolic SAR. Remember that the Heikin Ashi helps us to smooth out price movement, and it makes it easier to identify trends. Okay, now this is our Parabolic SAR. You're going to see small dots above and below the candles. These help you to spot potential reversals and guide your trade exits. And then finally, we are going to be adding the 50 period EMA. We're going to change this to 50. Exponential is the method. So this is the 50 period EMA. Okay. The EMA is your trend filter. It keeps you trading in the direction of the main market move, which is essential for consistency. Now, how do we enter trades? For a buy trade, just make sure that the candles are above the 50 EMA. It's a very simple strategy, okay? You just have to make sure that your Heikin Ashi candles are above the 50 EMA, all right? And make sure that the candles are also blue. They are solid blue, okay? Or depending on your color code, all right? Depending on the color that you are using to indicate a bullish candle. Okay, but for the purpose of this video, we are using blue for bullish and red for bearish. Okay, so for a buy trade, you make sure that the candles are above the 50 EMA and your Heikin Ashi candles are showing solid blue bodies with little to no lower shadows. Now, what we mean by lower shadows are these wicks, all right? These wicks. So you make sure that the wicks are minimal. For example, you can see here there was no shadow at all. So this shows that the bullish momentum was quite strong. Okay, so you want to see something like this before you consider entering a buy trade, or at least you should see just a short wick. All right, the wick should not be very long. Either you see small wick or no wick at all. Okay, and then you also need to make sure that the parabolic SAR dots have flipped below the candles. You don't want to enter a buy trade when the parabolic SAR dots are still above the candles. They must have turned to the bottom of the candles before you enter a buy trade. Now, for a sell trade, the candles should be above. For a sell trade, I mean the candles should be below the 50 EMA. All right, your Heikin Ashi candle should be solid red as well, with no or little upper shadows. And then you must have the parabolic SAR dots above the candles. Okay, so this confirms a strong bearish move. The idea is to align all three indicators so you are trading with the momentum and not against the momentum. Okay, now exiting your trade is pretty easy. You just have to stay in the trade as long as the parabolic SAR remains in your favor. So if you had entered a sell trade around here, so long as the parabolic SAR is still above the candles, you can remain in your sell trade until the parabolic SAR flips to the downside, okay? And then if you are in a buy trade, let's say you entered a buy trade around here, you can stay in that trade until the parabolic SAR flips to the upside. So it's a very easy strategy, okay? The moment the dots flip to the opposite side, consider closing your position. This helps you lock in gains before a reversal erases them. All right, you can also use recent swing highs or lows as stop loss levels to protect your account. So if you had entered a buy trade around here, you can consider setting a stop loss just below the recent swing low. And then when the parabolic SAR flips to the upside, you exit your buy trade. In the case of a sell, if you had entered a sell trade around here, you can consider setting your stop loss right above that swing high. And then when the parabolic SAR flips to the downside, you exit your sell trade. Okay, no strategy works without proper risk management. So you need to keep your risk per trade at a safe level, no more than 1 to 2% of your account. This way, even a losing streak won't wipe you out. Remember, the goal is not to win every trade, but to have an edge that plays out over time. Okay, and the Heikin Ashi plus Parabolic SAR plus EMA combination works best on trending markets. So avoid ranging conditions where signals are less reliable. Also, I would recommend that you backtest this on your preferred market, whether it is Forex, stocks, or crypto. Right, it's important that you backtest this strategy on your preferred market before going live. You want to test this out on a demo account. You know, whatever mistakes you're going to make, you should make those mistakes on a demo account first before, testing the strategy out on a live account. All right. And don't forget that you can have a very, very profitable strategy, but if you do not know how to manage your risk, it might look as if the strategy does not work. And that is the reason why risk management must be always emphasized. Okay, you must manage your risk properly so that you can be profitable. In the meantime, uh, if you found this breakdown helpful, click the like button and subscribe to get more proven day trading setups delivered straight to you. Let's keep building your trading toolkit together. See you in the next video.